a very big networking body in the education systems, which is meant for promoting management education throughout the globe, particularly India. And it is encouraging the students as well as faculty and the management institutions by sponsoring and supporting the activities like faculty development programs and the conferences, seminars, and other activities. Also, it is conducting the annual convention once in every year, which promotes all the participant members to participate in different activities and the competitions and share the ideas each other. Also, it is act as a advocacy body member for AACT and other statutory committees for making the policies and all this. And coming to the board members and the the president of the AIMS, the last year we had an active president, Professor Nandagopalji, and this year we have Professor Sudhir Sharma, and the next year upcoming president, Professor Patraji from Kolkata, is playing a bigger role in making this particular organization to the greater heights. And also, I would like to convey my sincere thanks to Business Standard, the higher officials of the Business Standard, for every webinar. They are quite supporting to this activities, making this event a great success. All this. And coming to Professor Shanthakumari, she is one of the active researcher and administrator. Above all, she is one of the excellent teacher. Now she is working with VIT AP, VSB as a professor, and she had a bigger experience with so many institutions, universities, including Ph.D, VIT, and other institutions. And she has published many papers in reputed journals, Q1, Q2, and so on. Scopus, Web of Science. So also she is an expert speaker for many different platforms. We are so fortunate, including myself, to listen her valuable words towards the financial literacy for Gen Z, which is one of the burning topic in the society. I hope that these few words will go to the participants, to which makes Madam's speech very interesting and enthusiastic. Thank you very much for giving this opportunity. Now the platform is given to Professor Shanthakumari Madam.
Thank you, sir. Thank you for AIMS just relying on me and giving me opportunity to deliver the sessions, whether the Wednesday sessions for the faculty or for the young leaders. This is my second session on financial literacy for Gen Z. So why this topic? Because as sir said, I think it's a burning topic because a lot of concerns are happening in terms of Generation Z, because Generation Z is a workforce now. They are also in school, they are in colleges, they are also in the workforce. So they are in the 3 levels now. And they may be the future workforce also in the near coming years. So according to the Gen Z definition, which I have taken, it's the people who are born between 1997 and 2012. So some are in schools, so some are in colleges, and some are working. Like my son, he's in 1997, so he's working. Okay, so all these type of people are there. And they are digitally dominant person, that they are only tech savvy. So they are born with mobile. That's what we have to tell. So we all saw mobile because we are all boomers or the 70s Generation X. Okay, we all only saw the tring mobile, and then we saw the smart mobiles or everything, the digital world. I think during our MBA only we saw internet and mail, etc., etc. So it took time for us to learn, but these people were born with the IT in their hand, and they use, I think 97% of the people are using internet daily, according to the Gen Z. Okay, and 98% have Gen Z have smartphones. So without smartphones, they are not there, because since Corona came, I think even everybody who can't afford gave smartphones to the children. Why? Because classes were conducted in the smartphones. So we tell that this generation is fortunate enough to get smartphones. That's what we can tell. The situation made them to get the smartphones, and internet was the mode in which we delivered classes also. So everything changed for them. So they saw a different world. Okay. So we find that they use mostly YouTube, Instagram, TikTok, Snapchat, Facebook, Twitter, rather than the physical interaction. So they don't believe. Why we are telling all these characteristics is finance is something like, you have to talk, you have to observe, you have to have financial facts, reliable data. But these people know, they look into YouTube as reliable, Instagram as reliable, TikTok, Snapchat, Facebook, Twitter, these data as reliable than the financial reports which is coming in. Okay, so they look into how to invest in cryptogram only in YouTube. They check what is happening in no banks only by seeing YouTube. How to open an account, see YouTube. How to open a internet banking, see YouTube. So this is how they have been living. Okay, so we were not like that. We went to the bank, we just saw, we asked how to open the account. No, we had only that white slip, pink slip, everything to fill for deposit, withdrawal, etc. So I don't know whether this generation knows what is pink slip, what is the white slip which is available in the bank, which is the basic mode of having a saving account. So everything for them is online. So step by step they see, and then they do everything step by step by the guidance of the online. So that's their generation. So their financing is completely different, but we have to guide them. That's what I'm telling, how to guide them, how faculty can guide them, how they themselves can guide them. Like, how can they go to the parents? How can they talk with them? How can they get input from the parents also? Because for them, everything is online, no? So they have to talk to the family and then be with family. That's what is going to be the whole content which I want to tell. Okay. So you tell that Gen Z is 30% of the world's population. So they're going to be 27% of the workforce nearby. Okay. 73 Gen Z, they want only sustainable product. That means long living products. Okay. They are having mental health, which needs more attention. They feel that mental health is more important. So they are very cautious, because many people nowadays are they're using words like anxiety, depression. So for them, no, these words are very common. In our generation, we didn't have those words. Okay, Gen Z didn't, or Gen X didn't have this word. Okay, but Gen Z, mostly they're telling you, I'm stressed. Even in the school days, my son used to tell, very stressed. Okay, lot of homeworks are there. So this word comes very frequently in them. So they are using mental health, because finance and mental health are totally related. So we are taking that data. Okay, Gen Z mostly want to start their own company. So startups, they want to venture into startups. Okay, so that's also some of the study they are doing in. Gen Z want real people in the advertisement. Even if they say YouTube, even if they see Instagram, they need real people to promote the product, or real people to talk about what is their problem. So no, so only you can see them forwarding all the whatever they see. Some accident happened, they forward, because they see the real world there only. So they don't. We all like cartoon. No, we had cartoon pictures to see how to open an account, how theft happened in ATM, like that. We like to see cartoon, Gen Z or X, Gen X, Millennium, etc. But these people are not like that. They have to show them real case. So in ATM, theft happened. So they'll have a video on that. It will be forwarded in WhatsApp. So they feel that that real image should be there for them to test. Okay. And they are holding products which are having social justice, because they are towards social justice also, because they want to go for social justice. So they prefer only products which are companies which are having social justice. Okay, they are little, and when it comes to psychology, they are little anxious, they are little nervous. Okay, so they are a bit depressed than the other generation. That's what they have given us as statistics. So that's why we are telling these statistics, because finance is mostly related. See, if you don't have money in your pocket, no, you'll be having tension. Okay, if you don't have your ATM card, you'll be feeling tension. If your GPay account doesn't have any money, you'll feel tensed. Okay, and these are the people, again, in terms of suicide, in terms of many things, these are the people who are there. Okay, so for them, no, a small failure also they can't accept. So financial failure, how they will accept? Okay, so we have to make them very strong in terms of planning their finance, so that no, they are financially strong. When they're financially strong, their mental health will be very happy, because mental health and finance is related for all the generation, whether it is me, okay, whether my grandfather, mother, my father, everybody, finance, but they know how to make happiness, but then too, they need money. at least for the basic needs, no, to buy food, grocery, etc., we needed money. Okay, so we had some emotional tie-up with the finance. So this generation, since they are emotionally, getting depressed or anxious or anxiety problem very fast, it's safe for it should be safe, like, no, they should have a good financial planning. So only we tell what literacy they have to have, what they have to read, what should the government give as a literacy for the Gen Z. What should the schools and colleges teach the students? What should family teach them? Because it starts from house. Okay, we all learned, saving only from the house. So where do we start it? Okay, that's what is the real need of the hour. Okay, so I'm relating here the financial literacy with mental health also. So what do you mean by financial literacy? It's the financial information and skill necessary to make decisions based for your money. So okay, so we have everybody have money, and everybody wants to make wise decisions based on the money. Okay, so this is the information which you need and the skill which you need, and it all with the mindset. So in my mind, I should know what is budgeting. Okay, it should become a habit. It should be a mindset and it should be a habit. It's not a theory. Please understand, finance literacy is not how much knowledge you have. Okay, it's like it is a habit. I'm making it as a mindset, and I'm making it as a habit daily to do my budgeting, to do investing, manage my borrowing. How do I plan for taxation, and how do I plan for my financial management, personal financial management. Okay, so here I'm telling how do you set a mindset and how do you set a habit of this. I'm not going to tell what knowledge you should keep, because we are teaching, say for example, for an MBA student, we are teaching what is financial management, we are teaching personal finance. I think even CBSE syllabus has what is personal finance. Okay, those things will not make them practically go and do budgeting, investing, etc. So we need that mindset and habit to be developed. So that comes only when you are with the family, when you learn, and when there is a workshops which are happening to help you understand that. So that's what is the main crux of financial literacy according to me. Okay, so we have to understand what is the risk and reward outcome, because mostly the outcome of financial decision is either you get a reward or you get a risk. Okay, if you invest in a wrong place, you get a risk. If you borrow more money in using your credit card, you get a risk. Okay, if you manage every money and if you save your money properly, saving with investment. Okay, just not keeping the amount in your saving account, just making saving plus investment. If you can plan, then we talk about the rewards. And some more things which everybody should know. It's not that only people from arts, that is economics background, or people from finance background, MBA, all these people only should know economics. But I have seen, when I was studying, even engineering had something called as economics for engineers. In that, they learned about microeconomics, they learned little about macroeconomics. Okay, they know what is inflation, how it is affecting the products which we buy. Okay, as a consumer, how I will get affected if inflation is increasing, if crude oil is increasing, if government is increasing the tax, what will happen to my father's salary. So all those things, some knowledge we will have. But nowadays, when I ask the students whether you're reading newspaper or no, do you know something about the financial budget which is going to come in the March? I find like no, people are like no, they are not having interest in that. But when it comes to financial literacy, that basic concept of macroeconomics is also needed. Like why no interest rate is increasing in bank, what is repo rate, what is reverse repo rate. It's not that only MBA students should know that. Okay, when you take a newspaper, I think whether it is Business Standard, Economic Times, these terms are there. What is inflation? Inflation is going to increase. These terms are there in the paper. But our students, no, our children are be reading Hindu. In Hindu also somewhere, no, they talk about the purchase power parity, how people are being affected, how the dal price is increasing, oil price is increasing, why petrol price is increasing. Everything comes. But how many of us read newspaper? How many of us make the habit of reading newspaper and seeing the impact? It's not just reading and getting the knowledge, just seeing the impact, practical impact on our financial decisions. Because everybody live here to earn something. Our purpose of life is to get a good job. If you are a student, whether you are a school student, everyone, they ask you what is your aim in your life. Your teacher asks, your relatives ask, your friends ask, everybody asks what is your aim in life. At the end of the day, what are you going to do? Okay. So for that, what we have to know, what studies we have to do. If you are in school, what is the degree you're going to do? Okay, if you are in a degree, then you will have to know what job you're going to get, whether you're going to go for PG or whether you're going to go for a job. For in a PG, whether again higher studies or whether you're going to go for a job. Okay, if will I have money to support my job? That is my father, will he support or should I support myself? All these things are there. So we are telling financial literacy is not just a subject to be taught or just a laboratory setting where we tell, okay, you have an investment lab in the college. Okay, try to invest in the stock, just get your experience. That's all. Okay, so that's not the real thing which we want. We want you to plan your life. Okay, plan your life happily. Even from the school days, people can save. Okay, pocket money your grandfather will give if you fall in his feet during Diwali or during any festival. Every elders will give you money when your birthday comes, when you fall on the feet. So what are you doing with the money? So how are you managing the money is very important rather than telling, okay, this is money, okay, this is saving. The theory we don't want. We want you to understand the implications of borrowing. Say, for example, in US, they took this particular data. They found out that Gen Z has little bit less understanding when compared to the other generation about what is borrowing. So why should we borrow? How can we borrow? How can we reduce the risk of getting like a bankruptcy? All these things they didn't know. Okay, that knowledge was very less in the Gen Z. Like saving also was very less compared to the other generation. Okay, consuming. Okay, what do you mean by consuming? All the factors Gen Z had a very less knowledge when compared to the other people. They only see YouTube and other things, but they're not having in-depth knowledge on what is insurance. Okay, they don't know what is how to minimize or mitigate risk. Where do we invest? How do we select the data that is reliable data? Because everywhere data is available, but where is reliable? Where is it reliable? Okay, is it coming from the right source? Because nowadays media, we have to look into the right source. Each one gives a different perception of one particular news is coming in a different perception. Each writer is writing in a different perception. You can see NDTV is telling you differently. Your local channel is telling it differently. So how they perceive is completely different. So now you have lot of information. Okay, it's like a big bucket of it. Informations are there, volume of informations are there. You tell cloud computing, everything is there. But for investment, we need the right decision. No, for saving, where do we save? Which is safe to save? Okay, where do we borrow? Okay, how much can we borrow? Which bank to borrow? All these things we should make decision based on the analysis which we are making. Okay, so for that, Gen Z, they feel that in US, they feel that they are having very less knowledge. That's what the research has told. And most of the people got motivated in financial literacy. Gen Z got motivated. 16% strongly agree that they got motivated after COVID. I think many people opened, even in India, many people opened DMAT account only during the COVID, after COVID season, because that time they were spending was very less. They didn't buy new dress. They didn't have travel expenses. Okay. So they didn't go for foreign trips. So all those things minimized. So many people had enough money so that they thought that, okay, let us save. Okay, let us put somewhere. So that type of financial literacy worldwide, this is US data, worldwide happened only during the COVID timing. So that's what the data tells. But in India, what they are telling us, according to Dash and Ranjan, they are telling that they conducted a study on financial literacy, but they are telling financial literacy means not only financial knowledge, okay, just knowing what is interest rate, what is bank, what is that, this, just, it's not just knowing that, okay. You have to go with your attitude, that is your emotions, which is attached with the finance, okay. That also is very important. How is your attitude, whether you are having positive attitude towards finance, okay. Many people tell that, no, I can't, money is not coming to me, money is not staying with me, okay. I don't know, no, I learned so much, but nothing is happening with money. I don't know what I'm doing with my money. So that type of negative thoughts they have. Why? Because their finance knowledge is there, but something related to the behavior is also missing, and the attitude is also missing because they lack little bit of knowledge also. So the cognitive attitude, okay, the affiliation attitude is also there. So the cognitive attitude is also very important. So how is your mindset towards finance? How is your mindset towards money? Okay, that is very important. That is what I want to. The generation is there to change. What is money and how money is important to us? That every generation has to know, but generation is it has to know more, because I'll tell you the data for that. Okay. And next thing is financial behavior. What do you mean by financial behavior? Are you opening an investment account, or are you doing budgeting? Okay. Are you properly planning your tax? Okay. School children, what they can do? Are you starting to save? Are you sitting with your family and discussing about your family expenses? Do you know how much your father earned? Do you know how much your family members spend? How much expenses happen for food? How much expenses happen when you ask for a mobile or for a dine out, etc., etc.? Do we get involved? That's what is very important in terms of financial literacy. So in India, we are telling when a financial literacy means it's knowledge, attitude, and behavior. Okay. So these are the things which you should have. If you are telling that I want to be financially literate, okay, so RBI conducted some survey, 20,000 in 29 state and 5 union territories they conducted across all ages, gender, okay, across all income levels, okay. They used in 10 languages also. They converted this survey toolkit in 10 languages and they wanted to find out what is India, okay. So they found that financial knowledge about time value of money, interest on loan, how much percentage of people have these knowledges. They ask questions on compounding, risk and return, inflation, diversification, because these are the important things which everybody to know. Like don't put all your money in one place, in one basket. That's what we tell. Don't put all your eggs in one basket. Why we tell? Because if it breaks, that's all. You will have a greater loss. So you should know that you should. Why did your father have some account, some money in form of cash? Why did they have some money in the form of land? Okay, why did they put some money in fixed deposit? All these things you should ask your father or ask your parent, or when you are earning, you should know what you do with your money. And what do you know about time value of money? That is, time value of money is, as you say, today's value. Today my father used to tell that, okay, during we used to ask him like, no, give me some 500 rupees to get a slipper. He will tell, during my days, no, with that 500 I paid my fees, I got dress, I also, got slippers, everything I got. Apart from that I had saving. Okay, but you are now asking 500 rupees for the slipper. So the time value of money, inflation, all those things we have to take into consideration, because no, that day whatever value my father tells in terms of 500, today if you go out, I think if you go out for a movie, I think 500 is not enough. You know the ticket value, you know what is popcorn value, and whatever is available there, a water bottle or whatever you get, I don't think 500 is enough to for a family with one husband and wife and one children. Okay, with that 500 rupees, I don't think time value, we have to know what is time value, really what's happening to our money, and what do you mean by compounding interest? Okay, what do you mean by risk and return relationship? So all these knowledge they have asked. And yes, people had less knowledge on compounding, like what is compounding interest, that they know interest rate, PNR by 100, that they know because we studied in fourth standard. But compounding interest is not being taught to all the people in school. Okay, we have taught only simple interest in schools. Okay, compounding is like whatever we put in bank, how it is getting compounded, interest on interest rate, how do we get all these concepts? Everybody don't learn. Okay, that's the reason why the knowledge level is very high. So we have to see where it is lagging. How do we teach everybody about compounding? How do we teach everybody about time value of money? Because that is the next percentage where financial knowledge is less. Okay, so these things, how interest rate is getting affected because of government, everything we have to teach them. And what is diversification? Okay, so this is knowledge. And they asked about the attitude towards financial knowledge. That is, how do you have a disposition, or your mindset, or your no your brain related to the whatever your money. Okay, the attitude towards money. I think they said that the west zone has an inclination towards saving, and the south has inclination towards spending. So south and east zone, they said that they like spending more. Money means for them spending. These people told, West Indians told that, west part of India, they told that money means for them saving. Okay. So this is how RBI has found in terms of financial attitude. Then financial behavior is how many of them have saving bank account, how many of them do budgeting. Okay. How many of them know about their living expenses. All these things, questions were asked about behavior, because how people know that, okay, I'm having money is coming inside, I'm spending, and this is how I'm saving. Am I having enough money, or again I'm borrowing or not? Because many people nowadays use other people's money, that is credit card. Okay, so most of the time we spend on credit card, excess over whatever income we are getting. That is the spending culture of Gen Z. So only I'm so much worried about Gen Z now, because I'm not telling about everybody. There are few Gen Zs who are brought up by the family, culture, telling that saving is very important. You have to have your own saving, etc. Those type of children even plan very well. That's how the status tell that if your parenting is very good, yes, the Gen Z also have done a very good investment. Okay, so this is about finance literacy in India. We do have this inclusion, financial inclusion. Okay, first national strategy for financial inclusion started in 2013. Okay, in 2020 again, they have modified it by including content, the capacity, community led, because each community has a different one. We tell that no, some community during Diwali they start their new account. During Diwali they start investing in stock market newly. Okay, all these things, community led financial literacy is also being imparted. How do we communicate about financial literacy to the children, to the society? Government is taking much effort. Collaboration is also happening, like colleges and SEBI, colleges and RBI, schools and RBI, schools and SEBI, government and state government and schools, like that. No, they are creating some literacy, financial literacy. SEBI and schools, they are creating some financial literacy. So we do have several programs like Pradhan Mantri Jan Dhan Yojana. Okay, Pradhan Mantri Mudra Yojana. Okay, Atal Pension Yojana. All these people are trying to have more programs for financial inclusion in our country. So when you are telling financial inclusion, that means availability of finance is available for the rural area also, for everybody across the age, across the gender, across whatever religion or whatever we tell, everybody is getting money and everybody has money, but we should have financial literacy for using this money. So they are creating some programs, initiative taken by the government to teach them. So these are the programs which they have. Okay. So why this worry is there is, you find that Gen Z is a population which is contributing to 1.8 trillion of spending, direct spending by 2025. This is the report which is being given. That means they are more into spending. They want to spend in terms of fashions, eating out, automobile, consumer durables. Okay, no, earlier what we do, mobile is only for no communication. That's what our generation, we feel. We don't want every month a new mobile, or every time a new model comes, we don't want to change. But no, nowadays, we find the younger generations want variety. Okay, a variety, they want change. Okay, so what they do is, I'm not telling everybody, I'm again and again telling, it depends on your family, how they impart the importance of money, how they impart what is investment, what is culture. That's what is the final crux I'm going to tell, how you have to make the children in the house be a part of your decision making also. Make them involved to know what is your salary, make them know what is your spending, how much everybody spends in the family. Okay, once they are, I think 10, I think they will know like what is money, because they are asking you something, you tell them that what is the cost, okay, how much expenses you are having. So that's why these things I'm telling, because they are into spending culture. Mostly they want different dresses. I'm not telling they want costly dresses. Sometimes they are using the sustainable products. So they are the best people using sustainable products. Okay, so this is the BCG report which they are telling, they are spending more across fashion, eating out, travel, abroad travels, etc., etc. That's the latest thing. And the other worries which I made me think about this particular topic is Gen Z and debt. That means what? Getting loan and not finding it very difficult to repay, getting very anxious because of this situation. All these things are making them feel depressed, anxiety, okay, health issues, more of healthcare expenses. All these things are happening because of their mismanagement of finance, especially getting more loans. So CIBIL, TransUnion CIBIL, they also told that millennium generation makes 35% to get the loan. Closely, Gen Z is 22%. They are also getting the loan. And then most of them, 48% are first time borrowers in 2023-24. So many new people have started borrowing. Okay. So maybe the Gen Z who have come to work, they started borrowing. Millennium who have now got promotions or coming to work, they have also started borrowing. So this is an alarming thing that, okay, I'm not telling don't borrow. We have to borrow, but are we planning within our expenses, like within our income and expenses, are we planning our debt so that we can repay the interest rate without any stress? Okay, we are ready to closely give a auto debit. Okay, just give an auto debit, close it, and then with remaining expense, I can manage. If you can do that, then you can go for the borrowing. Otherwise, the borrowing has to be, again, we have to look into planning. I'll come to how to plan. So there you have to be very careful. So this is one reason why I took this particular topic, and it is very alarming for us. Okay. So every Gen Z, their finance is completely, their mindset for finance is like this. I want to be independent by the age of 30. Every 1 out of 5 generation Z people want to be independent by the age of 30. Okay. According to the mental research, what they are telling us, they are emphasizing on 91% of the Gen Z wants to save. They want to have their own car. They want to travel abroad, because I find, no, I didn't have the urge of traveling abroad, but my son has the urge of traveling abroad. I don't know, like, he has not asked money from us. He has taken his own salary savings and he has gone for the trips wherever he has gone. So there are some children like that. Okay, they want to travel abroad. Okay, they want to have their own home. They want to have their car at the early age. Okay, and they want to save and they don't want to rely. 38% of the people want to save their own money. Only 35% of the people just looking for parents also for their spending after they earn also. Okay, so this is the state statistics which are there. And Gen Z, they are looking for the best deal. Say, for example, when they purchase in Swiggy, they will see what is the offer, what is the coupon available. Just check the coupon, apply the coupon, and then buy. Or is there any offer? Is there any discount? Okay, they want the best deal for every purchase which they make. Okay, so that's what people are doing. That's the way people are doing now. Okay, so many people are thinking like that. Okay, is there any thing in terms of no no, like you have I want to have a purchase, so I want to do it. Okay, so is the screen shared? Is the screen visible? Because I'm not able to see the screen. Are you able
Yes,
to
ma'am.
see?
It's visible, ma'am.
Okay, okay. Because I feel like, no, is it moving?
Yes, ma'am. It's moving, ma'am.
Okay, done. Okay. So we have that type of, things which people have. So we are worried about, say, for example, whether people will be living to this expectation. If they are properly planning, yes, they can live to this expectation. Their expectations are very good, because we didn't have all these expectations when we were young. Okay. So many people tell that they are investing in mutual funds, exchange traded funds, cryptocurrency. Even I teach, I'm a finance person. I'm also a doctorate in capital market, but I fear to go to cryptocurrency. But these people know they want to take because they want money. Okay. So they want to earn money because they want to get settled soon. See, their expectations are very different. So for that, no, they want to make money. So they want to do all these type of investment, even without having the knowledge. So my advice is just have a good degree. First thing, if you want to earn, the people who are in schools, who are in colleges, just have a good degree, because you are making investment. Whatever degree you are learning, whatever certifications you are doing in that degree program, that is the investment which you are making for earning and making a better earning prospect. That means your salary level you can bargain. If you are studying well, if you are studying with, say, for example, nowadays, people study just telling that I want a 9 CGPA. I don't know how they will get 9 CGPA without putting effort. Okay. They want to learn without even internalizing the concepts. Okay. But I want people to learn internalizing the concepts, get extra certification so that you can bargain, you want to earn more. Because my motive is not 9 CGPA. My motive is with 9 CGPA, I have to get a good job so that I can get a salary of 1 lakh per month or 3 lakh per month. So that's what is my quote. Okay. So earning means my degree should be good, or my education should be good. The certification which I do, the skills I develop, okay, skill set, okay, the technical, the human skills, everything which I develop should help me earn more. Then next thing is spending. Yes, we know to spend, but how much should we spend, on what we should spend? Okay, I think the Gen Z, they know better because they have everything there in your hand. So they check. When I ask my son, can I get a pen drive? Can you tell me which pen drive is good? Or can you tell me a mouse which is good? This mouse which is good. So what he will tell is, okay, just tell me what type of mouse you want. I want a wireless mouse. Okay, immediately he compares. He checks into all the products. Then he gives me the best product, telling that this is the value for money. So spend, but this is the value for money. Okay. And they also value some children know in this age, in the Gen Z, what they do is, if the parenting or if the molding is very good, they see the necessity, that is whether it is needed for this hour. Okay. If it is needed, they buy. Okay, but they spend on branded products. I don't tell they don't spend. They spend on branded product, but they want it to be sustainable and they make the best deal. Okay. Then next thing is saving and investment. After you spend, there you should have some money to save in your account. You have to in that you have to make some investment also. You should have some bank balance also to make contingency, emergency, whatever thing you have to do it. And then investment also for a better future retirement planning or for your, see, now you will not be in the, maybe that people who are born in 1997, maybe they may be in the marriage age. Okay. So you may start looking for alliances. So it's better that no, we invest and keep, because after marriage, you have to see your expenses or you have to take care of your family. So now itself start, when you start your job, okay, how much should I invest? Okay, how much should I invest for buying a car? How much should I invest for buying a house? How much should I invest for my retirement planning, my travel planning? How much should I save for my travel? Because I want to travel. I want to go for dine outs. I have to take my family for dine outs. I want to go with my friends for a dine out. All these things are Gen Z's quality. Okay, for that they have to invest. They also borrow, they use credit card, but how to use credit card wisely? Should I get a housing loan? Is there any tax benefit for the housing loan? New regime, old regime, everything I have to see. Next thing is how do I protect? Protect means, am I having current ratio? That is my current ratio very good? That means, am I having enough money in the form of convertible, easily convertible assets, so that if I have any liability now within 1 year, which I have to pay, I have some amount, okay, to immediately pay. So that protection I have. So immediately within 1 year, if anyone tells that, okay, this amount you have to give me, okay, I need emergency, give me, means you should be in a position to have that particular asset to give that money. Okay, repay that money. If you're borrowed also, you should be able to repay. Say repayments, you have a sister who is suddenly asking you. You have your mother who is suddenly asking you some money. That means that current liquidity positions, if it is very strong, then we can tell we are protected. Okay. If anyone asks, you are ready to give them that money. Okay. So that type of protection is also very important. So for that, I tell budgeting. Do budgeting. Okay. First to do budgeting. Everybody sit and do budgeting, because my father, I've seen him writing every day what is his expenses. Every day he has list out, no, like I did this, I bought this, I gave donation, everything he writes. So that I have been watching. So that's also a good habit which a family member should teach, how to budget. When you're putting your budget, please involve your children who are about 10 years, okay, 10 to 13 years, because Gen Z, I'm telling you, 13 years, 15 years, please involve them so that you can write down the priorities, tell them how to do financial planning. Okay, ask them to sit and track the 3 months expenses, 2 months expenses. What is fixed expenses? How much rent are you paying fixed? Okay, how much is the EMI you are paying fixed? Everything, please tell them. And what are the variable costs you have? Groceries, if any function happens, what happens? All these things you have to tell. And then separate what is need and want. Please distinguish them. What do you mean by need and what do you mean by want? Need means I need a mobile phone. That's all. Want means I need iPhone. Okay, so that want can be different, but you have to tell your children who are in school that this is what is affordable. Okay, you can't satisfy your children, buy everything for your children, and then no, tomorrow when you are suffering, even they will suffer. So it's tell the reality, tell them that this is what is our income, this is what is our expenses. So do we need it? Okay, plan. Okay, sit and together plan. So planning ahead, I will tell what are strategies you can use or what are methods you can use. Have emergency corpus amount, because we are in the world of uncertainty. We don't know when we will have job loss, illness, because we didn't expect COVID. We are not expecting some new viruses which are coming in. We can't expect accidents. Even if we drive properly, there are many people who don't drive properly. So there are a lot of accidents happening, losses happening. That is loss of hand or no damages are happening. So we need emergency corpus. Please keep it aside. Okay. And then usually income, the formula what we tell is income minus expenses is equal to saving. But people have to tell income minus saving is equal to expenses. So keep aside savings like contingency, okay, emergency, and then whatever is necessary for your investment, for your insurance, everything you do it, and then plan your expenses for the month. If you can curtail it, it will be much better. But nowadays, what we are doing is income minus expenses is equal to saving. Saving is not there because expenses exceeding income. So we are going for credit card. Okay, we are going for borrowing. And at the end of the day, we are only thinking like, how do we earn more? How do we earn more? Why is the salary not increasing? We get tensed when there is no promotion. We get tensed when there is no increment. See, life is to enjoy. Okay. So if we plan this, what will happen? We'll be happy to know that, okay, I've saved, future will be good. So at least I have to curtail my expenses. So this time, no dining out. Okay, this month, no dining out. Or this month, monthly two I planned, I can reduce it to one. Okay, all these things we can, one movie, two movie. Okay, now OTT is there. Can we watch in OTT? So all these planning, if you can do it, life will be much happy. So we tell that follow the rule of 50, 30, 20. 50 is your need. Need means the grocery, the mortgage payment, the rent you have to pay, the EMI which you have to pay, the electricity bill, insurance. Okay, all these payment which you pay is 50. That is a basic need. Then wants is I want to travel, entertainment, and I want to go to a hotel. That's not necessary for your survival. But if you want to do it, then 30% you have to keep it aside for that. Okay, and 20% for saving and debt payment. That means 20% after paying your debts like interests or your EMI, etc., etc., please plan your saving. Saving is PPF, mutual fund, fixed deposit. Because Indians, only less number of people invest in stock market. Most of us prefer, now they are preferring mutual funds. Mostly our father, grandfather, even the younger generation, they are investing in fixed deposit. They have come to mutual fund and some are going to for cryptocurrency. That is Gen Z. Okay, not the Generation X. So we can go for that also. Other thing is envelope method where people usually have earlier, no, I find few families have different envelope for different categories of expenses and they put that money inside that envelope. So I have to pay loan. I'll put it in that envelope. You can do it online also because you have a lot of apps available for this envelope method. So put it online telling that this much amount will go for this envelope because our money is in digital format. Earlier we used to have salary in the physical format. We used to get cash. We should sign in that with the revenue stamp, we will sign and then we will get the amount if it is more than 5,000, all these things we had. But nowadays, no company is giving you physical cash. Everything is in bank. And after demonetization, we are afraid of withdrawing the money and keeping at home because we don't know when colors will get removed from which color note will be getting removed. We really don't know. Okay. So it's better to have it as a digital cash. So when it is digital cash, have a digital software where you can have different expenses in different columns. Okay, you have a lot of Excels and add-ins, etc., etc. Apps also you can create and then put each expenses. This is for entertainment and recreation. This is for medicine. This is for paying the loan, and this is for school fees. Like that, if you can put, then it will be much better. Okay, so this is called as envelope method. The other one is pay yourself first method. So first they will pay only savings and debt. That means any investment you have, like fixed deposit, recurring deposit, first they pay that. Any loan you have, then you pay that. Then after that only you do your expenses. After paying this, if you have money, with that only you plan your expenses. That is called as pay your first budget because you will not get stressed. Because I told you, Generation Z is always getting stressed. And money and stress is totally related for every generation. I'm not telling about Gen Z, but Gen Z is having more anxiety problems and more depression problems because they're not talking with people. They're only texting with people. So if you talk with people, you can feel the aura. You can feel the energy of the other people consoling you. So here nothing is happening. They want to just message and tell I'm depressed, or they want to put an emoji and tell they are depressed. So what they have to do is first they have to do is pay their loan. Then pay their investment. Fixed deposit, if they put recurring deposit, put there. If they put systematic investment plan in mutual fund, please pay that. Then after that, what you do? You plan your expenses. So this is better for pay yourself first budget method. Second is priority based method. So based on your financial goals, please give ranking. And based on the ranking, you give the money. So this is called as priority based budget. So which is, it may change. This is like flexibility, just to help you to have a flexibility. So this time, this month, maybe many marriages will happen. So you need expenses to go out. So that type of things which can happen, So you have to have, family things like that you have to have. So this type of method is also there. The next method is zero budget. Zero budget is you put every money in under each head. That is, you don't allocate anything before itself like planning. You spend each and every money under each expenses. Okay. And end of the day, your expenses, income minus expenses should be 0 at the end of the day. That means even saving, you should spend. Okay, this I'm having fixed income, fixed deposit, recurring deposit 500 rupees. Okay, I will give. Okay, I will give a systematic investment plan 500 rupees. Like that, you will give. Okay, so you give, and end of the day, you should ensure that income minus expenses is equal to 0. This is called as zero budget method. Next is investment. What terms you should know is what is interest rate, which is affecting interest rate, what is price level in the market, what is the price of your dal, what is your price of the petrol if you're traveling, what do you mean by diversification, how do we reduce risk, what do you mean by index, because we are telling stock market, what is index. Please know all these things before investing. Don't blindly invest by your advisor. You know this, ask him why are you asking me to invest in this? Ask him what, okay? Just get clarification before making investing. And then borrowing also, when you are borrowing, please know what is interest rate, why interest rate is reducing now, what is compound interest rate, what is time value of money, okay? How do you minimize the payment, like EMI and then payment period? How do you determine your payment period? 15 years is better, or to get a car loan for 5 years is better. So all these things you have to plan. Whether to get a car loan for 20 years is a want, getting a car loan for 7 years may be a need for some family based on their income. So just check the payment periods and do it. Loan structuring is also very important, like how much loan to get, how much to repay. Everything has to be very crucially planned. Next, taxation. Everybody have to pay tax if you go for job, even if you're an entrepreneur. So employment related tax, how much you are paying. Investment related tax. If you invest in stock market, yes, again, you have to pay tax. Rental, HRA, are you getting any tax exemption? Are you getting any inheritance from your forefathers, your father, etc.? Because each and every source of income is taxed differently. Agriculture, okay, everything, income from rent, you are leaving your house for rent and you're getting income out of it. For that, it is taxed. So everything you should know. Don't think that your auditor will do. Ask him why this tax is happening. Let him do it for you, because you don't have time, because you have some other work to do. You are a multitasking person. Gen Z is a very good multitasking person, but know why he is doing it and what he is doing. Okay, your tax person, you ask him what is what, so that tomorrow you can plan differently, like where do I reduce my tax, okay, what should I do, etc., etc. You can plan properly. Okay, so government, how do we impart financial literacy? Start from home. Make your children sit with you if they are school children. Okay, every day, make, if you're in a family, like joint family, appa, that is your father, mother, and your wife, you're married and you're with your father and mother, sit with the family and do it. Or if you are a separate person, make your wife sit with you, make your children sit with you, and then do the like planning, budgeting, etc., etc. Government is also giving financial literacy through RBI and SEBI. Schools and colleges are also conducting financial literacy program to know what is saving, how, why should you open a bank account, why should you do saving, why should you know put post office saving. Everything they are teaching you. It's become a need of the hour. Okay, so why should we need financial literacies? You make a better decision, you will manage your money and your debt. That means especially debt, because I told you Gen Z is borrowing more, and I'm worried about their borrowing more. So they should manage money and debt, and they should have good financial goals, okay, which is reality, okay, not hypothetical financial goals. It should be very real, that I want a home with this budget, I want a car with this budget. Everything has to be very real. And then in terms of, you have to make your monitoring of expenses and reduce your expenses if it is needed. Have less stress and anxiety, because you should live a happy life, because mental health and Zen are closely related. So most of the words which we hear, like stress, anxiety, depression, comes from Gen Z. So you have to take care of your finance. Then you make a ethical decision making, because I heard last time in a news telling that in Apple, I think 365 people were being fired. Why? Because they gave a wrong claim for insurance. That is for the taxation. Okay, there what they do is, if you give charity, that amount of charity which you give for that association, I think Apple was refunding. So some employees had a tie-up with some charity-based company, which was fake, and they told that they are donating this amount, say maybe 5 lakh they will donate. And then here they have taken that 5 lakh from the company, and they got some 4.5 from that company, that 50,000 is bonus for them. So these type of setup a company they did, and Apple has found out that these people are submitting these type of fraudulent things. So they were being fired. for taxation purpose. So I want you to make an ethical decision making in use of credit cards, in investment and in loan. And next thing is you have to have a structured budget. That's what I told you. I spend you most of the time telling you what are the techniques, that 50-30-20 technique or the envelope technique, or you are having priority technique, okay, zero budgeting technique, whichever technique you feel which is good, can do it. Thank you.
Yeah. Good evening, ma'am.
Good evening, sir.
How are you, ma'am?
Fine, sir.
Yeah, it's a great pleasure to give a vote of thanks for our event.
Thank you, sir.
And it's apart from all the topics which you have covered, it's a very useful to all the participants, and especially for Generation Z. Nowadays, financial literacy is more plays a crucial role to all the categories, even Generation X and Y, Z also. But most important to is Generation Z. You have covered all the segments related to the financial literacy, what they needed in current scenario, and how they should, how they can prevent financial frauds from the hackers also, and how to protect their in the form of cyber security crimes. And you covered very well about financial, personal finance, and also behavioral finance also covered, and RBI policies, what they have created for creating awareness for the financial literacy. And you have given one best formula for expenditure. Everybody may think they will less expenditure, then after they will go for savings from their income. But you have given new formula. Incomes should be subtracted. Savings can be subtracted from the income. Then we can go to spend money for our personal expenditure. It's a great pleasure, ma'am. And I would like to thank for your presence and enlighten all the participants. And also, I would like to thank all the participants to make this event successful. Also, AIMS, ma'am, Priya ma'am also, every time she's arranging the number of events for our college and our HOD, sir. Thank you, and all the technical supported team. Thank you, Anand.
Thank you, sir. Thank you. Thank you.
Thank you, ma'am. Thank you,
Thank
sir.
you. Thank you, sir.
Thank you. Bye, ma'am.
Bye bye.